All right. Hello, everybody. Happy Thursday, everyone. Henry, how's it going, my friend? Good to see you. All right, all right. Ooh, let me go ahead and button this shirt up a little bit. All right, that's a little bit better. Keith, what's going on, man? Good to see you. Hope you all are having a fantastic evening. Kevin, thanks for putting that out there. Thank you to any veterans that are on the call tonight. There's a little cold bug going around the house. Both kids have been home for a couple days, so if I have to pause every now and then to cough, that's why. All right, well, we're going to give it a few minutes. We have a lot to talk about tonight. A lot of good stuff, a lot of crazy stuff in the markets. We'll give it a few more minutes as people are coming in. Oh, that's awesome. Yeah. Wow, what a crazy couple days. We're going to dive into that pretty much at the top of the hour. We'll just give it a couple more minutes as people are coming in. But quite the crazy of days. Can we leverage our relationship with Wefunder to become the primary banking choice for startups listed on the platform? Or is that illegal? Eric, I've actually been thinking about this as well. Something that I have written down. No joke, it's like right there. I was thinking about that. As you know, we build our credit union base and partnerships with credit unions and in that industry. I'm pretty sure that we can actually do it ourselves. And so that's just some broker dealer stuff that we can go through later down the line. But again, that's a part of the ecosystem. But yeah, I know I've been thinking about that as like, how can we maybe list startups on our platform in conjunction with Wefunder? But they actually have an interesting, I don't know if there's like a conflict of interest there or not. I don't think so. But I know they use like Boston Bank and Trust or something like that. But anyways, yeah, I think it's a good idea. And I do have it written down, which is kind of awesome. Shane, what's going on? Good to see you. And I thought you were on vacation, bro. I thought you were enjoying it. This is awesome. That's awesome. Yeah, it's definitely something I've been thinking about, you know, like building these partnerships. I have some actually cool things to tell you all tonight about partnerships that we're building in the credit union space. It's been a busy week. It's been a crazy week, as you guys know, in the markets with FTX, which we're going to dive into tonight. Yeah, let's give it one more minute, and then we're going to get started. Would somebody mind jumping in the Facebook group and letting everyone know we're live? We're going to cover combining emails for. Jason, do you mean combining emails like in the app, like for those that have like multiple different accounts? Okay, let's get started. Yeah, Jason, we'll touch on that at the end for sure. But I do know it's still a problem for a few people. Hugh, what's going on? Just saw you pop up on Facebook. Okay, let's get started, everybody. So an insane week, as you all know, with FTX. What's up, Steve? How's it going, brother? So today, we're going to talk about the FTX Fallout swag order update. John, what's going on, my friend? Good to see you. I just saw your text come through, so I'm glad you figured it out. The swag order update, not much to update you on. Those are going to start going out here shortly. The shipment should get here on Monday, so that I can start sending them out to everybody. Credit union updates, what's going on in that. Wefunder, and then question and answer at the end. So if you have questions, go ahead and pop them in now or as they come up, and then we'll go ahead and put them in at the end. Okay, so a crazy couple of days. So a couple, again, like I know now we've been talking about this for about 3 to 4 weeks of why it's so important that we are member owned, member driven, and why transparency as we grow, as we have more assets under management, as our revenues grow as a company, once we get to that space where we want to really pump what we have to the market. This is why I have a conviction that the more member driven and member owned that we are, the less bullshit happens like this. And so I know you guys probably have been reading as much as I have about how this happened. I mean, Sam Bankman-Fried by a lot of people was considered the untouchable crypto king in the market. But Corey, what's up, bro? But yeah, I mean, obviously not, especially when you siphon off deposits from your customers and loan it to your other company. That's fraud. I'm sure there's a legal way that he might have gotten around it, but who knows? So if you guys don't know, quick recap: FTX is bust. Sam Bankman-Fried lost 96% of his net worth in 24 hours. He lent $10 billion, at least a headline, $10 billion from FTX deposits, customer deposits, to Alameda, which is his like sister company. Sequoia Capital lost about $500 million. Tom Brady lost a lot of money, allegedly. And this is why, more than ever, and we've been talking about it for about a month now, why we need to own our own process, why we need to do what we can to insulate ourselves and build a moat. And this is why even more that I want more members owning this company, thousands, tens of thousands, because there's safety in numbers, and then there's somebody at the top that needs to bow his knee to everybody else. And I think that's very important for transparency, for growth, and for our brand. And, you know, we are People Finance for a reason. And yeah, and this bullshit, it just won't cut it here. And so kind of interesting. We've been talking about making sure that that we're protected, that we're insulated. We build a moat around our business by owning the processes. Yeah, it's pretty crazy. So with that being said, I got an email from Alpaca today because FTX.us, they supply some of our crypto trades, not all. Some of it goes to ErisX as well. But they were saying because there's no liquidity issues right now with Alpaca and FTX.us, but to get ahead of that, just in case something happens, they are asking that all of our crypto positions be liquidated for about 48 hours. And they are working on rerouting all of our crypto business to onshore other centralized exchanges like Kraken or Gemini or something like that. That's all I'm sure I couldn't even get a hold of them today. Their phones were going off the hook. But if you have open crypto trades on our platform, and I think this is the same for like Robinhood and Webull, FTX.us supplies all of them. We're asked to close down those positions, and then in about 48 hours they'll have they'll reroute everything from FTX.us to other exchanges. So, anyways, I have a lot of thoughts on this, but I want to make sure that we use this as a catalyst for why what we're doing and our mission is so important, and why it has to be about providing the best services for not only us, but for the thousands and thousands of people, tens of thousands of people that join our platform in the coming quarters, in the coming years, that we are very member-owned, member-driven, member-governed, and transparent on all our practices. So working hard on that. Something that I would also like some collaboration from is I would like to start building a member advisory board now. And I would know we touched on this a little bit last week, but I think it is important that once a month or twice a month that we have a member advisory board that is in the know and helping make decisions for the good of the company and on behalf of other members. And so I would like to hear some thoughts on that. How are you saying we need to sell our crypto on stocks and wait? Yeah, Jason, that is what I'm saying. So Alpaca messaged me at about 4:00 today and asked that we liquidate our crypto positions on our platform, and then about 48 hours they'll have a new provider for us, because again, there's no liquidity issue that I've been told from both FTX.us or Alpaca, but they want to get ahead of it, and I want to get ahead of it too. So I just found that out a couple hours before. I think Carson already sent out an email to everybody. But yeah, if you have an open crypto position on the Stonks people platform, then liquidate that before anything else happens. Randy, what's going on, man? So anyways, I would love to hear some thoughts on kind of that member advisory board. That's, we can have an election, or we can, however we want to put that together. I'd love to hear some feedback, but this is the continued commitment to make sure that we stay member-driven, member-owned. Okay. Well, I went pretty crazy on social media today about this stuff. So, yeah, anyways, it's pretty crazy. Okay, so swag order update for those that are just joining. Colin, what's going on, man? If you want to hear my rant on FTX, for those that just joined, this video is going to stay up forever, and so you can scroll back if you need to. Okay, so swag order update. Shipment's on its way. When it gets here, I'll parcel it out, send it out. So so it is on its way. We're pretty back ordered actually. So, but it is on its way, and so as soon as those get in, it's going out. How many members are we looking at? Sandra, do you mean members like on the advisory board, or like how many we want on the advisory board, or what do you mean by that? Yes, you can definitely watch later, Randy. Okay, so yeah, so swag order going out as soon as it gets out. I think for the advisory board, I haven't given it too much thought on the number yet. I do want an odd number, so 7 or 9 or 11. That way, if there needs to be a vote or whatnot, then there's never a tiebreaker. But yeah, I think election would be the best for the OGs as well. For a board, as long as the members on the board are held to a standard of participation. Yeah, agreed. Michael brings up a good point. And so I had a feeling that everyone would be pro advisory board. Let me put some KPIs and some like not requirements, but expectations of what that board member would need. And it's something that we're going to carry out. Obviously, we'll refine it, as we grow. But yeah, I think Michael points out, that there needs to be a participation and a level of effort put into that as well. Sorry, my cursor was going crazy for a second. Okay, let me jump through the credit union update real quick. This has been. Oh, I thought I had a slide for it. I guess I'll just talk to it. So credit union update. So yesterday, I talked with a consultant that owns a credit union compliance company, and she is very well connected. And so basically, she gave like 3 roadmaps for wanting to do what we want to do. And so I'll go through those 3, and she laid them out hardest and longest to easiest. And the framework in which she operated from was nothing's obviously impossible, but how can we get to market quick with the desired results? And so, again, I just had this call yesterday. Her and I are talking again next week. And then she's already set up several meetings with some top players in the credit union space. So in saying that, she really, so to throw this off, she absolutely loves our mission of people finance, putting people first, putting people over profits, providing quality, state-of-the-art solutions, banking solutions, trading solutions, credit solutions. Absolutely on board with what we want to do. And she was very, very thankful that we never took VC money. And she was very thankful that we are member-oriented and member-driven and member-owned. Obviously, this fits well into a credit union ethos, right? And so from in saying that, she is consulting us pro bono, which is absolutely insane. She's a very, very high ticket person, and so she loves it so much that she just wants to help us get off the ground and be able to provide these services to our members. So here's kind of like the roadmap, and then her and I will dive more into it next week, and then hopefully we'll be able to have a absolutely clear plan once I talk to a couple of these CEOs and other firms to help us get off the ground. Okay, so the hardest, the longest, and the most regulatory scrutiny is starting a credit union from scratch. So she said about 5 years ago, the regulators kind of changed their position on credit unions. And it's kind of bullshit because, and you'll see why here in a second, but they are heavily making small credit unions merge with larger credit unions. For whatever the reason. It's literally the antithesis of what a credit union is, but she was saying that small credit unions with declining membership or small membership with 100 million or less in assets, they're being forced to merge with a larger credit union, which is why there's so many big credit unions being shutting down. Also, she said it will take some time, 9 months to start one from scratch, 9 months plus. And then we'll need 2 million in deposits that are from non-members, which is not, I mean, when you think in the scope of bank deposits, that's not a huge number, but it is a number. It's not 30 million like an actual bank. Yeah, see, Jason, yeah, exactly. Jason said it happened to his last month. And so it's not the 30 million in the 2 years to have a federally chartered bank would be, but 2 million is still a number that we'd have to strive for. And then about a 9-month plus process. So that's the hardest and the longest. And then we have a little bit easier, a little bit shorter in timeline, but with nuance and complications. That's repurposing a credit union. And so that would look like a credit union that is a legacy credit union, maybe around 60, 70, 80 years. And whether because accounts are aging out or the industry that the credit union was started in doesn't really exist anymore, whatever the reason, they're showing a decline in membership quarter over quarter. In those cases, we could petition the advisory board of that credit union and say, hey, you're a legacy credit union. We want to keep that intact and keep the current accounts active and switch over to People Finance. And Kevin, I'll get to this question in a sec. Kind of switch to People Finance, and then we bring new accounts, new members. She said that has about a 50% success rate when you petition a board, because if they are declining membership, they are going to want to see something. But it's still a target for if it's declining and low asset to deposit ratios, then it's still a target for forced merger. And she said they will require you to merge if they want you to. If the NCUA wants you to merge, you will merge, or they'll fire the CEO and the board and do it themselves. And so, so she said you'll have some time in order to get those deposits and memberships up, but it's still a possibility that you have a forced merger anyways. She said, okay, so that's repurposing. It's possible. It's easier. It doesn't take as much time. So that is a viable option. Then the third, and she said, oh, and finally, both those scenarios have a lot of regulatory scrutiny. And so, which is fine because we're not really trying to hide anything, but there's a lot of regulations. But she said, if you have a fintech and a credit union, not only are we going to be very highly regulated on the credit union, but it also exposes the fintech, our company now, to regulatory scrutiny as well. And so she's like, if we can avoid that, that's awesome. So the third option is what's called in the credit union space, green labeling a credit union, meaning we piggyback on the license of a big existing credit union. And so how she explained it was we still have our own products. We still have our own services. We can come up with loan products. We can come up with checking accounts, savings accounts, credit cards, debit cards, personal loans, HELOCs, mortgages. You can still do it all. But the compliance is handled by the not sponsoring bank, but the bank that we're piggybacking off their license. And she said why that's good is because they're regulated. They'll underwrite what you do, but they're the ones that are handling the regulations and the compliance with the governing body. Also, what that allows us to do as well is it opens us up to investments from credit unions as well. And she said there's a very big pot of money for fintechs that want to come in and help grow credit unions, whether we go through green labeling or whatever that looks like. And so what that means is a credit union, which is a nonprofit, would take a equity stake in our company or loan us money, however the deal's structured. But then they're incentivized to help us grow, right? And so that's an option. CDFIs are an option for us as well, which is a certified financial institution, a community development financial institution. She said we can get the CDFI certification relatively quickly, which opens us up to grant money to be able to structure some of our loan products for the betterment of our people rather than profits. And those both go in there. Also, and probably the best one is by going this third route, we do not fall under any regulatory scrutiny because, again, the compliance is handled by the sponsoring credit union that we green label from and piggyback off their license. they would allow us to form an advisory board at the sponsoring credit union so that we can get the products and services that we want on our platform. And then they take care of all the heavy lifting from a compliance perspective. So there's a lot of money and grant money and no regulatory oversight or scrutiny or time, and as it relates to starting on credit union from scratch. So basically, what that means is we'll be able to do whatever we want as a credit union with having essentially a partnering credit union in the mix with us. So those are the three, and there's a lot more nuance. It was a 2.5-hour conversation that I had with her, and so I'm giving the cliff notes of this, and then her and I are talking more about it next week. But I wanted to kind of lay out those three all viable options, and she said, if we start with option 3, doesn't mean we can't ever repurpose a credit union. It's getting to market, being able to offer the products that we want to offer anyways, and financial services and trading and everything. But we can just get off the ground faster. So, okay, so that is kind of the 3. And if you guys have questions that I can't answer, if you guys have questions that I can't answer on this, and I'm not going to pretend like I can, I will write these down, and when I have my meeting with her next week, I'll bring them up in our meeting. Okay, so what does our insurance liability look like starting out? Kevin, on the, here, I'll throw this up on the screen. So on the, it depends on which route we go. If we started from scratch, we'd have to, I haven't gotten any quotes yet, but we'd have to have several types of insurance. But then we had to have insurance with the NCUA as well, because they're the ones that federally insure the accounts. So I don't have any quotes on that, but I know that in relative terms, not that much as it compares to the deposits that we would gain. But we would have to put out some money for that. Would she be willing to supply regulatory guidelines for advisory board? Yes. So this is actually something that she does, and this is also something that Callahan and Associates, the owners of creditunions.com, they have 800 plus credit unions that use their platforms and services. I'm actually talking to the CEO next week. She set this up, and he really, really likes what we're doing and wants to talk about how we can help. And so they would actually be able to help advise the advisory board on regulatory guidelines as well. If the sponsoring union is forced to merge, what happens to us? Good question. 2 things. One, the sponsoring credit union would most likely be a larger credit union. So one that wouldn't be flagged for a merger or forced merger. And a few reasons for that. One, if we went with like a local mom and pop credit union in Iowa, they probably wouldn't have the infrastructure and capabilities to be able to offer the products that we want to be able to offer. And then second, it would open us up to that forced merger, and then those accounts would have to go to another credit union, which we're not about, switching accounts to accounts. So she was saying it would be with not necessarily USAA or Navy Federal, but a credit union that wouldn't be earmarked as a forced merger opportunity. Yeah, so Jason, this is true. Jason asked, third option means we could not do anything that they wouldn't greenlight, correct? So this is true and not true at the same time. So here's what I mean by that. At least from how I understand it, and I will bring this up with her, but how I understand it from our conversation, before we decide on a partnering credit union, we would already have a list of things that we want to do, right? And so before we sign on, then we would have that agreement. Second, we could also target credit unions that invest into our company as well, because then what we want to bring to market would be mutually aligned with what we're doing. And so we grow, we make revenue, they make revenue as an equity partner. But then third, because of how we operate and through a CDFI certification company, which would be us, and other grants and loans and funds that we have available to us in the credit union space, we could also pile those funds and be able to offer products maybe if a credit union doesn't allow us to. So, for example, she's written about $1 billion in grant money that's been allocated to her grant proposals over the last 15 years. And so, say we raise a loan fund from multiple credit unions and the CDFI and grants, pull this into, let's say, $100 million fund. Well, we can use that and go roll out student loans at 1% because that would be a directed fund by us. So it depends on what do we want to use from that green lighting credit union, and then what kind of fund could we have just from the CDFI? And CDFI is a from the U.S. Treasury, so it's non-recourse. It's meant to help people get out of debt or development in communities and whatnot. So it's kind of interesting, but no. So there would be some options for us if we were allowed to do that. So in theory, we could break away from partner credit union if we got big enough under option 3. Yeah, so that's what she was saying. She's like, we can start a credit union, but if we want to get off the ground, offer those same types of services that we want to offer now, we can do that, and then we can also have in our roadmap that we decide to break away and start our own credit union in the future. Yeah, that's exactly right. Are we able to use a third party for loaning or strictly based on our deposits? Yes to both, Hugh. And so we can use a third party. Well, so third party, it wouldn't be a third party. So the third option would be us, just have it piggybacking on the license. Then we can use those deposits, as needed. There probably is a type of revenue sharing model with the partner and credit union. But the third party, it's not a third party. So we get CDFI certified. That's People Finance would be the CDFI certified company, the financial institution. So those third parties, those are in-house. Those would be in-house. What she was saying is credit unions, we would be a disruptive force in the credit union space by doing this. By bringing a fintech like ours that does trading, banking, lending that's supported by credit unions, no one's doing it. So she said there's a lot of money out there for us to go and grab, and then be able to use it on our platform. So yeah, that third party would actually be in-house, but funded by the cooperative of credit unions. Yeah. So this is all that would be all the case for sure. So. Private lending business to start generating revenue. Yeah, so we could do that. We'd have to get an MLS license, which our lead investor, his name's Mike, and you can see his name on Wefunder. He's licensed in, I believe, 32 states, but then we can piggyback off that license essentially if we wanted to move into lending more immediately. But yeah, so that's definitely possible to be able to do that. And I wouldn't mind even talking more about this if this is something that we want to go down, but also being associated with the credit unions and whatnot would allow us to do this as well relatively quickly. Okay. So those are the 3 options. And of those 3 options, mind you, there's probably like 30 subsections of those 3 options. But from a high level and what I can digest in 15 minutes, that's the 3. And then, we want to be our own institution someday. Maybe we go with the third option, begin private lending, student loan refinancing, those types of loan products. We have trading, we have banking, build up to 1 million members, and then maybe we branch off and start our own credit union. It's kind of how I'm thinking about the roadmap there. I know there wouldn't be a problem starting a credit union with 1 million users, 1 million members. So, it's the crawl, walk, run scenario where we could get open for business in a few months rather than 9 months, and then still have to build out the infrastructure, build out the compliance, build out the CFO, CEOs, and whatnot that actually know how to run a bank. This way, we can leverage those resources from piggybacking off of the license. So that's at least the thoughts right now. Again, this is why I think it's so important to have a members advisory board, because this is going to take more than just one conversation, and it would be nice to have a Zoom call with everybody so that like we can actually hear in real time, like I can hear like thoughts in real time. And so I want to make that a priority for this week is to start putting that together and putting some guidelines together for what that might look like. Okay, any other questions? That about brings us up to speed for tonight on the new stuff. Again, I'm talking with a couple CEOs next week of pretty powerful firms in the credit union space. They're very, very excited about what we're doing and what we want to bring to the market. And so I'll have definitely more details on that. But is there any other questions as it relates to kind of this update? Any questions that you want me to relay back to our consultant on maybe some clarity points that didn't come across tonight? So Hugh asked, the credit union would be directly added to our app. What time frame to add it? Okay, so yeah, so you guys know how like you go into the app and you can open up an Alpaca, a trading account, a brokerage account. It'd be the same. So you would come in, you would open up a checking account. There'd be loan products. Actually, I can show you. We did some more work on the app this week. I'll show you guys in a moment. But yeah, so you just come in UI, UX, open up accounts. It's federally insured. There's a trading account there, loan products that will be visualized over time. But then the supporter of that, in the back end would be People Finance Credit Union. And so we would be greenlighting a bigger credit union, but it would be under our purview, essentially. Yeah, agreed. So, and this is why it's so important that if we go that route. So Ed says, as long as we stay in control and not some giant bank, I'm good with it. Yeah, so as us going this route by green labeling a credit union, it keeps us in control. And then we actually have an advisory board at the sponsoring credit union so that we can petition for new products and services as well. So it is very collaborative from how I understand it, how she explained it to me. And I like that. And it's already kind of on mission with the credit union philosophy anyways, of member-owned, member-driven, member-run. And so I think it can be very, very beneficial for us. And we can build some great partnerships in the cooperative of credit unions as well. Wow, it's already 7:40. That went by quick. Are there any other questions that we can address tonight? Again, like we did last week, and we'll begin to do this. We'll continue to do this. We'll send out a recap email tomorrow for anybody that couldn't make it, and then in time for our next call next week. Oh, something that I do want to add. Starting to pump up the social media stuff, more posting, more content. If you guys can, I've been all over Twitter lately because everyone's asking me to. If you can go follow, or if you guys are on Twitter, it's at people_FI. So people_FI. I want to get it to like 2,000 or 3,000 of our OGs, of our members, and then tweet Elon, all of us at one time, when it's time to go viral with our app. So be thinking about that in the back of your mind. If you can, get on Twitter, follow our page, and then in the coming weeks, we will plan to be seen by Elon Musk for when we're ready to actually go viral. So, okay, any potential problems using my future. All right, hold on. Let me see what this is. Any potential problems using my future People Finance bank account on the trading app while also any shares? Seems like it might cause questions. Any potential problems using my okay, your bank account in the future on the trading app while also owning shares? No, there won't be any problem. There'll be two different companies. And so basically how that will look is People Finance, the fintech, right now, that's what we are, the corporation, will enter into a technology agreement, partnership agreement, technology agreement with the sponsoring credit union, similar to what we do with Alpaca. And then the sponsor will be members at the sponsoring credit union, is essentially how it works. I did ask that question today. Is there a conflict of interest there? She said absolutely not. It would just be a partnership agreement from a software company to a credit union. Combining emails, yes. So Jason, I have that in with Sina. He's our head of product, and I'll see if they can merge that in the back end. If not, I will let you know before we do anything. And but one might have to be deleted. So I'll let you. I have a call with him tomorrow morning, and so I'll let you know after that. Hashtag Brooks. Hey man, I started Corey. I started throwing hashtags in there today, and I got a ton more followers. So we got to keep it going. Can you send that out in a text? What to follow? Yes, I will. I will do that, Michael. Thanks. Again, the sole reason of this is we get 2,000-3,000 people on Twitter, then we all tweet Elon at one time, and he will be bound to see it and then retweet us for what we're trying to do, and then we go viral. So that's the idea there. So because what we're doing, guys, is it will disrupt the industry, and so we got to stay on brand, on mission, execute on these plans, and we'll be ready for some virality for sure. Okay, everybody. Let me make sure everyone else. I know, man. Just makes. I know. Well, okay, fine. I'm getting better at it, guy. No, I know. All right, guys. I got 2 sick kids, so I'm gonna have to run. I'm off crutches though, so I have this nice cane that my mom left behind a couple months ago after she had. I don't know why she needed it, but she had a surgery, and so I'm using that now. But yeah, so I'm off crutches. PT tomorrow morning, but I gotta go put the kids down. Baby girl had 140-degree fever a couple hours ago, so I need to go take care of her. But anyways, appreciate you guys. We'll send that recap email tomorrow, and then I'll text out everybody the Twitter handle and the Instagram handle so that we can build up that the follower base, and then we'll get ready to tweet Elon. Next week, I will have more updates for you as it relates to our next steps with the credit unions, and then we'll be getting now more positioned to launch Wefunder now that we have a clear direction on where we're going. So appreciate you guys. Let me know if you need anything else. Shoot me a text, DM me on Twitter, email me, whatever you need to do to get a hold of me. But appreciate all of you, and we'll chat soon. Have a great night, everybody.